Our first speaker is the partner and lead for digital transformation, KPMG in Africa, who will be discussing the topic, leveraging insights and experience to scale. He is responsible for driving KPMG's digital and fintech agenda across the continent. Distinguished ladies and gentlemen, please welcome Boye Ademola.
In 1998, there were a number of interesting companies that started across the world. A young man called Jack Ma started Alibaba. This was somewhere in China, a little-known place. And at that time, Goldman Sachs had said to themselves, China was a big market, and they wanted to do something big in China. A lot of people hadn't seen this coming. But this was 1998. In 1999, a young lady from Goldman Sachs, Shirley Lin, traveled and had a discussion with Jack Ma. Shirley's view was that Goldman should put money in entrepreneurs that had a very strong local context. So she traveled to China and met Jack Ma, and they had an interesting discussion. And, again, this was 1999. There was no business plan. There was nothing. But when they asked Shirley what she saw, she said, look, in his eyes, she saw intensity, she saw conviction, and she saw skill. So she traveled back to Goldman Sachs and persuaded the investment committee that, look, we need to do a deal with this guy. We need to put some money in this company. Remember, again, this was 1999. So they said, what's the valuation of the company? And she went, helped him with a business plan, and so on and so forth. And they valued the company at $10 million. So she called Jack Ma from Goldman Sachs and said, look, we're going to put $5 million, but the investment committee wants us to have veto rights. So we're going to control this company. This was 1999. And, Goldman Sachs invested. So this is 20 years ago, right? The last I checked, Alibaba was worth $480 billion. $480 billion. For putting $10 million in 1999. It's 20 years. So I want to come back and speak to you about something so topical for us as we look at the digital businesses. And what is that? It's about where to play in this digital game. A really important perspective we're going to share today is just looking at where we are in our context in Africa and being clear about where to play. If you go back to 1999, where Goldman Sachs was and looking at China, many people were not looking. It looks a bit like Africa to me. Why? Because if you look at us today, if I take financial services, lending in Africa is probably under 10% to the population, to the adult population that can borrow. If you look at asset management, if you look at who is invested in the stock market, I was shocked the other day when we were looking at the numbers in the stock market. How many people are invested in the stock market in Nigeria? If I remember these numbers correctly, it's under 2 million people. So across, you will see that there is opportunity to scale. And if we ask the question, how are we going to scale this opportunity, whether it's financial inclusion or whether it's consumer markets? Well, the answer to me looks like it's got to be through leveraging digital. And so wherever you're playing in your organization, my first point is where you play is where you can scale. That's what Goldman Sachs was looking at in 1999. Where you play is where you can scale. The other point that is important to make, and we're going to spend time today and throughout this summit delving into the subject is, what are the anchors for scale. What really brings scale? What drives scale? And in our view, one of the things that drives scale is customer experience. Being able to offer transformational customer experience drives advocacy, it drives your brand, and ultimately it makes you scale. The other thing that is important is insights, analytics, insights and analytics. And at the heart of this now is artificial intelligence. So we're going to spend a bit of time today also looking at insights, particularly AI, its derivatives, machine learning, and more importantly, what you need to do in your organizations to get the journey going on artificial intelligence. Underpinning this is our paradigm of design thinking. If you think about the fact that almost any product, any solution you come up with today can be copied, at the heart of what will differentiate you is not buying solutions just off the shelf, all right? Nothing wrong with buying solutions off the shelf. But underpinning your strategy is innovation. And we zoom in and talk about design thinking and how you can apply this. So for us, winning comes through experience, insights, and underpinning this, all right, with design thinking. So I want to share with you a company that you probably know. How many of us, we know LOreal, the cosmetics company? How many people know LOreal? How many of us use their products? I see some guys they use LOreal product. All right. But do you know that, LOreal is a digitally led company? And when I share about the giants, people usually come tell me, Boye, you share about 10 cents, but there are 1 billion people in China. So what do you expect? Yeah, 10 cents is going to have 1 billion customers. So LOreal has over 1 billion customers, 1 billion users internationally, and yet they are out of Paris, out of France. I don't even know how many people are in France. LOreal is an example of a company that is digitally led and is doing very transformational things with digital. They are very strong on the customer side, digitally, and very strong on the supply chain side. So this is LOreal and their launch of a product, Makeup Genius augmented reality solution, in 2015 was transformational for their business. And that particular solution essentially helped to answer the question, how can we scale product trials by our customers without scaling our cost? And this is one of the things you can see from results for LOreal. Their market valuation in 2015 was about $88 billion. It's climbed to $162 billion over the 5-year period. LOreal has a big presence on social media, big following globally. And think about this. It's not just the app, because they have to deliver products to customers all over the world. So they are also a very interesting case study when it comes to supply chain and distribution models. So the next point I just want to share about, remember I said anchors or the drivers of scale. One of them, customer experience, the other one around insights. We're going to spend time around AI today, but I want to say one or two things very quickly around insights and artificial intelligence. People say to me, how should we structure this journey on AI? And people say this because there is a lot of concerns around the quality of data. So the first thing that we tell organizations is focus on the business case. Focus on the use case, not your data limitations. People say, oh well, our data is not clean, we're not, storing data properly, it's just garbage and all that. It's garbage in and garbage out. No, we tell them, and that's our message to you today. Start with the use case. What problem are you trying to solve? Because it's interesting that people have been cleaning data for the last 2 years. We meet clients all the time that have been cleaning data and they're frustrated. More importantly, there's no value, there's no outcome from that effort. It doesn't mean you won't clean data or cleanse data, but the message is focus on the use case. And for us, when we look at AI and its application, we say that it's sector agnostic and it's function verse. Use AI from a transformational perspective for particular functions of your business. For instance, customers. If you are interested in insights on customers, you can't focus your transformational efforts on use cases that focus on the customer and focus on giving you insights about your customers. Use cases on finance, use cases on operations, on supply chain. That should be what is driving your AI strategy. The second point that is very important around AI is around the governance of data. So even for a moment, if your data is no good, let's even assume it's no good, well, you have an opportunity from where you are to start the journey. So there has to be some governance around data, how we store data, how we segment the data, and how we process the data. And one of the advantages of being in 2019 and doing this is that we no longer have to buy these servers that cost so much. We can leverage the cloud and have this data in what we call data lakes. So that's really important. On just rounding up on artificial intelligence, I'm going to just encourage you. The key is to start the journey and remember that it's a very iterative process. So the more you do it, the better the data becomes, the more insights you get, and you can move from where you are. You will find many companies are data rich, but insights poor. You can leverage that data and grow in insights. And some people, frankly speaking, are data poor. You don't even get that data on customers. But, the key from us is start the journey wherever you are. I want to go back to that story I told you at the beginning. So it was 1999. Alibaba was valued at $10 million, and Goldman Sachs had an opportunity to put $5 million and control the company. If they had done that, they will be worth, just from Alibaba, $240 billion today. But do you know what Goldman Sachs did? You know what the investment committee did? They told Shirley Lin that, why should we put $5 million? Why don't we put 33% and look for another investor? And so in the end, they put $3.3 million in 1999, which was still fantastic. If they had the 33% today, that would still be massive. By 2004, 5 years later, Goldman sold their shares for $22 million and exited Alibaba. How many people you will have made that decision? It's easy to say this thing in retrospect. No, you would have made that decision. Although, the venture capitalists will tell them at multiples of 7x, it was a good deal for Goldman Sachs. But, you want to own half of Alibaba. So I contrast this to another guy called Masayoshi Son. How many people have heard of Masa? Yeah, I think he's the richest guy in Japan. He also met Alibaba. He met Alibaba a year after Shirley. He also met Jack Ma a year after Shirley met Jack Ma. And the minute he met Jack Ma was still pitching to him. He stopped him and said, you know what, I want to put $30 million in this company. Jack Ma said, I didn't need $30 million. I need only $20 million. So it's okay, I'll give you $20 million. He didn't have a big stake. But fast forward to 2019, Son owns 26% of Alibaba. through SoftBank. I'm sure many of us have heard of SoftBank. All right? So I want to close on this note. 3 questions for you in your digital journey. What exactly is the definition of value? Think about that for a moment. What is the definition of value? And I'm going to leave you with the question because I'm not going to answer it, but I'll tell you a few things. When you look at the valuation of companies, does it matter that they are scaling? Does it matter that they are data rich? Does it matter that they are innovative? There's a big discussion in Nigeria between the telcos and the banks on value. Well, I look at it as a value discussion. You can create value, but it doesn't necessarily mean that you're capturing the value. So who owns the platform for USSD, where we do all the star 999, star 111? Who owns that platform? Let me ask. Who owns it? Is it owned by the banks? Is it owned by the telcos? All right. So you can create value. That platform is owned by the telcos, all right? I know the bank guys don't like this, yeah? But who is capturing value when we do those USSD transactions? The banks. So there's a difference between creating value and capturing value. So again, on your digital journey, it's important to understand this concept of value and how it's changing. Question 2. A lot of us here are from companies that burn a lot of cash on adverts, marketing, sales. My friend is here, and I was asking him how much they're burning in their company on marketing and sales and so on and so forth. They burn cash, billions every year. Question 2, how much are you burning on innovation? How much cash are we burning on innovation? And that's the difference between the present and the future. When we study the tech giants, we study even China in the US, the digital leaders are spending and investing cash on innovation. It's actually more expensive to buy innovation when it's a lot of cash. They have a fund. Some people call it a bond fund. All right? Because it fosters a culture of innovation. And in your organization, you cannot gather people to ideate, to work on a prototype, and you do not fund that brain work. People will, they will disconnect. It becomes a waste of time. So you have to fund it, prototypes, all the way to MVPs and into production. And my last question is around, what are you going to do about your business model? If you look around us in Africa, the business model that we have run, whether you look at banking, or you look at insurance, and so on and so forth, I said earlier, has not really delivered the penetration that we want. So it should tell us that we need to do something about that business model. In Kenya, I was in Kenya for a week, 2 weeks ago, and the Kenyans were talking about Fuliza. Fuliza is an instant overdraft product for consumers, and it's viral in Kenya. It's from Safaricom, Kenya Commercial Bank, and NCBA, a collaboration of banks and telcos to deliver a product that is viral. Someone would have said, oh, well, you can't do overdrafts in Kenya. How are you going to recover your money? And then people come with 20 reasons why you can't do the overdraft. But Kenyans are enjoying that now. So it's back to the business model. What are you going to do differently about your business model? Business models that do not give you insights into the customer. We see models where you are using agents, middlemen, and so on and so forth. Well, that's well and good for the present. But if you take a future view, how are you going to work on customer experience? How are you going to get insights about your customers? How are you going to transform? How are you going to leapfrog? How are you going to take advantage of partnerships? These are all business model questions. And they're questions for those of us in this room, leaders of companies. Thank you.